Welcome to the MBA, the Mortgage Broker Academy. I'm Malcolm Turner. In this video, we'll delve into the world of commercial mortgage brokers and provide a broad overview of the business. In other lessons, we'll do a deep dive into sales, marketing, and operations. But in this one, we want to give you a solid foundational understanding of why you should consider becoming a part of this rewarding community. Let's start with the learning objectives. By the end of the lesson, you will understand number one, what are the problems and issues in the industry and why it needs this masterclass. Two, the compensation model for commercial mortgage brokers, i.e., how we get paid. Three, the role and four primary responsibilities of a CMB. And then fourth, the MBA Fast Start Checklist, how it works and what you get from using it. Let's discuss the issues in America's lending industry. It's a mess. Number one, on the positive side, there's an abundant access to capital, but there's so many options, it overwhelms the mind as to which is the best way forward. Two, the big problem is all of it is sold by financial institutions acting like used car salespeople, pushing their product versus working with the client as a consultant to determine what they need first, then seeking to provide a tailored solution. Third, there's no standards of practice or national licensing. Who can lend or broker commercial money? Anybody. It's like the Wild Wild West, and unprofessionalism is common. Lastly, the loan process is murky. The lack of transparency provides no clarity to the borrower. The good news is every one of these issues are an opportunity for us to provide value. Commercial mortgage brokers simplify and clarify the lending experience for investors. We bridge the gap between borrowers' expectations and their goals. Let me give you an example. Just recently, I had a client come back to me. I had done a loan for them a couple years ago on a multifamily property in Detroit, and they needed to refi. Okay, and they needed to refi a year ago. And a good friend of theirs, who was another fellow investor, said, "Hey, who I've never met this person, said, don't use Malcolm to do your refi. Use me because, or use my friend because my lender is at the local credit union. The guy's cheaper than him. He's going to have a better interest rate. He's going to charge you less in fees, and he'll be able to get your deal done." So the client came to me and said, "Hey, Malcolm, my buddy says that his lender friend at the credit union can get me the loan at this rate with these fees, blah, blah, blah." And I said, "Wow, that's an outstanding rate. I don't think they can do it, but if they can do the loan, and you know for sure they can get that loan done at that rate on the fees they quoted, you should do it because that's in your best interest to do. No hard feelings over here, okay? But I'm just letting you know your loan, your property has a couple issues, and those issues I don't think are going to allow it to qualify for long-term financing. Now, if their guidelines allow it, man, go get it. I, please go get it because I want the best for you as an investor." They're like, "Okay, no problem." That was a year ago. They just called me yesterday wanting me to come refinance their property. And I was like, "But didn't you get that financed a year ago with the other guy?" They're like, "Actually, no, they never came through." And then I went to this bank and this other credit union because they were chasing a deal that first institution could never do. And they were trying to chase that with others, and they couldn't do it because the same issues that I had told them would prevent it from qualifying for long-term finances still existed. But now they've wasted a year of time, carrying costs, and due diligence fees for loans that would have never closed. But they're ready to listen and they're ready to move forward. And so that's where, as a commercial mortgage broker, if we handle ourselves professionally and in the best interest of clients, even when we don't always get the business, it will sometimes come back to us. Because if we're working as a consultant and we're actually working in the best interest of the client, they'll understand it and it'll work itself out. And let's not forget about the financial benefits. Commercial mortgage brokers typically earn 1 to 3% of the loan amount, which can lead to 6 to 7 figure incomes. Commercial loan officers working under a broker earn 50% of that origination fee. My current pipeline has deals closing in the next 30 days that will pay me anywhere from $4,500 up to $70,000 per loan. Now, I can't guarantee what you'll make. I don't know your work ethic, your ability to implement a plan, and your investor experience will differ and vary from mine. I'm just telling you what I'm doing and what's possible. Some of you are in better markets and have better connections than I did when I started because I had none and I was in Detroit. But what matters is your effort and commitment. As a CMB, you are primarily responsible for four things: sourcing clients, sourcing capital, structuring loans and negotiating terms, and managing the file throughout the lending process. Let's briefly discuss each. It starts with deal flow. Finding potential clients is essential. You'll need to network online and at live events and utilize social media and other marketing methods to build a strong pipeline. Once you have clients, you'll source capital for them by matching their needs to the right lenders. This involves searching for the best rates and terms from multiple sources, as well as vetting your lenders to make sure they can, in fact, close the loan you brought before them. Loan structuring is where we work our magic. We'll negotiate loan terms, such as interest rates, loan amounts, and repayment schedules to ensure that they align with our clients' objectives. Once the term sheet is issued and the borrower accepts it, you'll then oversee the entire due diligence process, from scheduling the appraisal inspections to setting client document portals to underwriting all the way through to closing. Organization and communication are key at this stage. We recommend you get software to manage this part of the process. Now, Academy members can access our software for their first few deals. Mastery members are given their own subscription to the software for free as long as they are members. The Fast Start Checklist is an action plan that maps out specific activities and timeframes to quickly jumpstart your business. Our goal with this tool is to provide you with a proven plan for success in this business. The metric is 5, 45, 25, i.e., the goal is 5 loans in 45 days with average earnings of $5,000 a loan or $25,000 in your pocket. At that point, you'll discover three things. One, if you can do the business. Two, if you like doing it. And three, if it can fund your lifestyle. You do that every 45 days, and you've earned $200,000 in a year. Our Fast Start checklist offers a structured plan complete with metrics to track your progress, and you get the support and guidance of myself and other commercial mortgage brokers in our community to keep you on track towards your goals. This lesson is just an overview of the commercial mortgage broker business, but in subsequent trainings, we'll go into detail regarding specific marketing techniques, product selection, loan processing, and much more. With the right mindset, these masterclass lessons, and our fast start checklist, you'll be well equipped to navigate the world of commercial lending and achieve the financial success you deserve.